And today on the show, we're going to be discussing lessons on personal finances. Yes, talking about the fundamentals of personal finances. So I want to say to you, ask yourself this question. Are you literate about your finances, and are your kids literate about finances? If you know little about the subject, then I'm telling you, you need to stay tuned for this entire show. And if you consider yourself to be wise in the ways of personal finance, you always can benefit from a little refresher. So the goal of today's show is to boost your knowledge about money management. Now, figuring out how to make money is one thing, but knowing how to make the most of what you make is another. Now, people with average, even modest incomes can learn to be smart, get out of debt, and retire rich. Let me tell you, the most important thing is to learn about personal finance and then start on a plan right now. Now, personal finances is one of the most important aspects of our lives, but it isn't taught in most schools, and the majority of people in the world are financially illiterate. You know, personal finances teaches you about money, and money gives us the ability to make decisions in life. Personal finance, by definition, is just how you manage your money, and taking the time to learn about it will give you freedom in your life and the ability to accomplish all of your dreams. Now, the most important thing to realize here is that money affects how you lead your life and how you live your life. If you don't have enough money, you can't do many of the things that you really want to do in life. So money is simply a tool that gives you choices along the way. And that's what I love. When you don't actually take the time to learn about personal finances, you definitely will lead a completely different life than someone with personal finances knowledge. Basically, you'll be less free than them. You'll be imprisoned by the stuff you own, by your job, and the reoccurring feeling of not having enough money. And we call this living paycheck to paycheck. That's the common trait of those who do not have personal finances knowledge. So learning about personal finances gives you the knowledge and the understanding to make smart money choices. And it also allows you to become more in control of your own life and then empowered to do the things that matters most to you. So as you can see, learning personal finances is important because we deal with it one way or another almost every day of our lives. It could be little things like setting up a budget before buying groceries, or bigger things like determining how to invest your money. But they're all related in some way. Without some knowledge of at least the basics of how money works, I think we'll all complain all of the time about not having enough money. So I say to you, I believe awareness about personal finance is essential for everyone, for our teenagers, for college students, and for those 20-somethings just getting out of college. The earlier we start preparing, the better off we will be in reaching financial success or financial independence. So learning how to manage your money means learning how to become free. That's what I call it. It also means learning how to become smarter and more aware of opportunities in your life. So money is power, and learning personal finances will teach you how to become more powerful. Just make sure you use that money in the right way. And one of the cornerstone concepts of personal finance is the concept of the time value of money. So here's a classic example. Pretend with me for a moment that you have a 25-year-old and a 35-year-old, 10 years apart, right? The 25-year-old invests $2,000 a year until the age of 65. Then the 35-year-old invests that same $2,000 a year until the age of 65. We'll assume they both get the same rate of return on their dollar. So in this example, we'll use 8%. So if you ask the question, where will each of them be when they reach the age of 65? Well, the 25-year-old has $518,113, and the 35-year-old has $226,566. Big difference, right? Well, the difference is $291,547. The only difference is the 25-year-old started investing 10 years earlier and invested $10,000 more. But you can see the big return there. However, that difference made him more than twice that of the 35-year-old. In this example, the knowledge of investing young was worth $291,547. I'm sure that's some money that you would love to have in your retirement account when you retire at 65. So personal finances is all about taking the time to learn about budgeting, to learn about taxes, saving and investing, to learn about managing credit ratings, and then compound interest. So learning about personal finances gives you the knowledge and the understanding to make smart money choices. And it all starts with building your budget. So if you don't have a budget, you definitely need to do that. You need to think of your budget as a means of setting and reaching your financial goals. In fact, it was Winston Churchill who said, quote, "He who fails to plan is planning to fail." You heard that one before? Well, let me tell you, in today's economy, setting a budget and sticking to it can be important to your financial situation. Although most people realize that they should be on a budget, they procrastinate because of the effort it takes to get one set up in the first place, or because they feel it would be too time consuming to track their daily expenses. Well, let me tell you, living without a budget is often a recipe for financial failure. Fortunately, once you get a budget set up, it can actually be fairly easy to track your expenses on a daily basis. A budget will provide you with a roadmap to financial security. And most people view a household budget as a sort of prison for their money, which constrains and limits their ability to spend it. I hear that all of the time. But in reality, it's really just knowing where you spend your money on paper before the month even starts. That's what a budget is all about. So one of the easiest ways to create a budget is to use a spreadsheet program, because spreadsheets have the ability to do calculations automatically once you get them set up, which can make daily tracking of a budget much easier. However, it is also possible to keep track of a budget on paper using a notebook or any other method that you prefer that works for you. Believe it or not, I still use a notebook to do my budget. So before you start setting up this budget, it's important to know how you are currently spending your money. For a month, you should keep track of not only your monthly bills, but also your daily expenditures, so you can know where you're spending your money. Once you know your monthly spending habits, then you just need to sit down and compare what you spend to what you actually earn. And keep this in mind, it may be very difficult to track your spending because today we live in a near cashless society. When we use debit cards, credit cards, automatic deposits, and wire transfers, we rarely even see our money. And this makes it easier than ever to spend, and overspend. So believe it or not, on average, most people spend more than they make. Can you believe that? People are spending more money than they're making. You probably know how much money you made last month, but here's the question. Do you know how much money you spent last month? That's the big question. Or do you know how much money you have left to spend this month? If you don't know, you're not alone. Let me tell you, most people have no idea of how much money they actually spend or actually spending on a monthly basis. The fact is that most of us spend 10% more per month than we make. That's what statistics says. And we do this by putting everything on you know, on that credit card. So again, you should think of your budget as a planning device or tool or a means of setting and reaching your goals. And with this budget, you're going to have both fixed spending and variable spending. So fixed spending are those transactions that reoccur every month, like your mortgage or your rent payments, your car payments, your premiums for insurance policies, and different things that are fixed. So you need to budget for them so you can see at a glance how much of your income is committed to current or future expenses, which should stop you from spending it on something else or spending it when you don't have the money. And then variable spending are those transactions that you have some degree of control over. For example, your utility bills or your cell phone, different things like that. You do have a little bit of control over it. So here are my 8 basic tips for successful personal finances. One, and the most important, you need to make saving and investing the highest financial priority in your life. And with this, I always tell people to learn to live off of 80% of your main salary. That was a tip and advice that was given to me a long time ago. Learn to live off of 80% of your salary so you can invest 10% and then save the other 10%. You should definitely learn to pay yourself first. And saving 10% of your income right off of the top is the concept of paying yourself first. And this is one of the oldest concepts of personal finances. The top budget item on your list should be the amount that you want to save or invest. For most, that number normally is 10 to 15%. And if you can't afford to do this right away, then it's time for you to consider finding additional streams of income. And remember, with each dollar you save, you are buying yourself financial freedom. So I would recommend setting yourself up on a bi-weekly or a monthly automatic deduction to have 10% of your income to go directly into a savings or investment account. That's the best way to save, to set up that saving on automatic deduction. And then the second thing is to cut your expenses and change your spending habits. Yes, it's probably time to reduce your spending. If you want to save or invest more, consider reducing your spending. Many of the most wealthy individuals lived well below their means for the majority of their lives in order to create more wealth in the long term. Cook at home, do fun things that are free, use cash more, and cut out the use of credit cards. If you don't have the money to pay for it right now, then wait until you build up your savings account and buy it at that time. So the third tip then is to become an investor. Now this is something that's simple. For all of those spenders out there, instead of buying a consumer product, why don't you buy the stock of that item that you really love? Instead of buying a consumer product, buy the stock. So the fourth thing is, I want you to actively work to lower your taxes through IRAs, 401ks, real estate appreciation, and business write-offs. You should take advantage of pre-tax savings through your company's 401k, 403b, or thrift savings plan. If your employer offers pre-tax savings through a 401k, the 403, or thrift savings plan, or other employer-provided retirement account, you should sign up right away. Your contributions will lower your taxable income and grow tax-deferred until retirement time. Because retirement plan contributions are actually made with pre-tax dollars, they actually reduce your take-home pay less than the full amount of the contribution. For example, if you are in the 25% tax bracket and you contribute $1,000 to a 401k, your paycheck shrinks by only $750. And if your employer matches your contribution, it's one of the rare opportunities to get free money. Say, for example, you earn $50,000 per year, and your employer contributes 50 cents for every dollar you contribute, up to 6% of your pay. If you contribute $3,000 to your 401k for the year, then you'll get a $1,500 match from your employer. So you can see that your retirement savings can grow significantly through the years, taking advantage of your company matching. So make sure and do that. And the next tip then is to build tax-free retirement savings. Now, even if you contribute to a 401k or retirement plan at work, you can also contribute up to $5,000 for the year to a Roth IRA, which can give you tax-free money in retirement. Now, to qualify for Roth, your modified adjusted gross income in 2011 must be $122,000 or less if you're single, or $179,000 or less if you're married filing jointly. And a Roth can be a particularly good deal for young people who are in a much lower tax bracket than you'll be in the future. So with a Roth IRA, you don't get a current income tax deduction for your contributions, but you can withdraw that money tax-free after age 59 and a half, and you can withdraw your contributions anytime without taxes or penalties. So again, take advantage of that Roth, R-O-T-H IRA. And here's another thing that's important. Take the time to learn about credit. It doesn't matter what age you are, learn about credit and how to use it appropriately. So take the time to learn about good credit and bad credit. And then my next tip is to learn the wealth formula early and start using it as soon as possible. Yes, did you know that there's actually a wealth formula? Well, let me tell you a secret that was told to me by my wealth coach years and years ago. If you invest $165 a month for 25 years at a high yield of, say, 15 to 20% return, you will be able to reach millionaire status in 25 years. Now, let me tell you, if you don't know how to earn 15 to 25%, then you have to devote the time to learn how to do it. And that's where real estate investment comes in and other high yield investments where you can earn that 15 to 20%. And I'm telling you, if you implement the wealth formula, you will be able to achieve financial success. And then, of course, the next one, of course, remember to set up that monthly budget. You'll appreciate it later on. It's also important to manage your credit and always know what your FICO score is. Now, your FICO score is a number ranging from 300 to 850. And is used to determine your financial responsibility. So to be considered as having good credit, you want to have a FICO score of at least 720. Now, this FICO score is made up of percentages. 35% is your payment history. 30% consists of the amounts you owe. 15% consists of the length of your credit history. 10% is the type of credit used, like your credit cards, or you're using car loans, mortgages, etc. And then the last 10% consists of new credit and new inquiries. And we all are allowed one free credit report per year. So if you don't know what your FICO score is, you need to find out as soon as possible. And all you need to do is to call a toll-free number, and that number is 1-877-322-8228. Call that number and order your free credit report today. Again, the number is 1-877-322-8228. So we're going to take a break right now, and when we come back, I'll share with you some techniques that you can use to build wealth. And we'll talk about the difference between being rich and being wealthy. So don't go anywhere, and we'll be right back. Well, welcome back to the show. You're watching Inspiring Moments, and today we are talking about personal finances and sharing some tips and strategies to get you on the road to building wealth. So let me ask you this. Have you ever wondered what's the difference between being rich versus being wealthy? That's one of the questions I used to always ask myself. Is there a difference? And if so, How can we separate the two similar concepts? Well, let me tell you, rich is a current state of being that can happen overnight. For example, lottery winners, newfound celebrities, and even high-paid professions such as doctors or lawyers or professional football players and basketball players belong in the category of rich because of the income they're generated. But if they quit their job or lose their job, then they're no longer rich. They have quite a bit of money, but only have that money because of one source, their income. Where being rich can happen in an instant, but at the same time, it can disappear just as quickly. Well, wealth is being rich, but being rich through ownership of assets. Wealthy people don't rely on their job, one particular asset, or even their natural talents. Wealthy people own assets, and if you took away their job, that's if they even have one, they wouldn't be poor. If you took away the income stream from a rich person, they would quickly become poor. And there's a huge difference here. So remember, financial independence means having control over your time without worrying about the ability to pay your bills. And ironically enough, you'll find many get-rich-quick schemes, but there aren't any get-wealthy-quick schemes. You've never seen that. That's because quick wealth is an oxymoron. It's like a well-built house. Wealth is established one brick at a time. The house of wealth cannot be built overnight. So you have to practice and do certain things to actually build wealth. So here are some strategies to build wealth. One of the first things I always say is you have to change the way you think about money. You have to develop a prosperity mindset and a prosperous consciousness. Creating wealth takes discipline, a consistent mindset, and the right set of knowledge. And then you want to look into owning or starting a business to take advantage of tax breaks. Invest in real estate for wealth building is something. You can start a real estate company or invest in real estate. Also, another thing you can do is find ways to earn extra income. Passive income or residual income. That's where it comes in writing a book or being a freelancer, but do something, find some way of doing something to earn passive income. That's a strategy to build wealth. And also what you can do is put your money into brokerage funds and tax-deferred retirement accounts. That's another way to build wealth. And here's one that's very important that I've done. Follow a success blueprint or model. You should study successful and wealthy people and then emulate or duplicate what they did. That's very important. And here's something, whenever I think about wealth building, this is something that's important when we talk about mindset. You need to break away from the mentality of past generations. Unless your parents were wealthy, you do not need to do what they did. You know, the definition of insanity is doing the same thing over and over again and expecting a different result. So if your parents were not living the life you want to live, then do not do what they did. You must break away from the mentality of past generations if you want to have a different lifestyle than they had. So do not listen to or take the advice from anyone who has not generated wealth for themselves. So to achieve the financial freedom and success that your family may or may not have had, you have to do two things. First, pay with cash if you do not have the money right now or cannot pay off the bill within 30 days. And do not purchase it right now. Instead, save for it. If you don't have the money right now, save for it and buy it later. And then second, make a firm commitment not to get into bad debt. Or if you are already there, focus on increasing your savings so you can get out of debt. And keep this in mind, if you are married or in a relationship, both parties must be on the same page about your personal finances, because regardless to how good you are at saving and investing, you cannot achieve financial independence if your spouse or your partner is an individual that rings up credit card debt. It's like trying to get out of quicksand, but having someone pull you back in every day. So no matter how successful you are, unless your spouse or partner is equally disciplined and investment oriented, your efforts toward a better, financially independent life are just going to be like struggling in quicksand. So that's something to remember. I can't believe it. We are actually at the end of our show right now. And I want to say again, thank you for joining us. I hope some of these financial strategies, tips actually help you. And make sure to tune in next time to Inspiring Moments, because I definitely want to hear from you. I'm going to ask you to send me your comments and questions about the show, and also let me know what success strategies topics you would like to learn more about. You can also follow me on my blog and pick up a few success strategies in between the times we see each other here on the show. And remember to pick up your copy of my new book, Yes You Can, Reaching Your Potential While Achieving Greatness, which is co-authored with the late, great Mr. Jim Rohn. And also much heartfelt thanks to my crew and to my biggest fan in the whole wide world, my dad down in Charleston, South Carolina. So join me at www.dramyhimes.com. And remember, we create a new tomorrow by what we dream today. We'll see you next time.